Hey everybody, how's it going? Oh man, I am back. It's good to see you guys. It's been a minute since I've been live. Can you guys hear me okay? I just want to test the audio. Press 1 in the chat if you can hear me. Oh hey. All right. Can you guys hear me all right? Let me know. Hey, you can hear me. Great. Dixon Cider, what is up, buddy? Good to see you, man. We got Red Squirrel in the house. Moon Mutt, good to see you, brother. I hope you're doing well. Hey, Mr. Angry Trinky. Guys, if you did not catch it, go to Crypto Boogie's YouTube channel on the Tacos and Kimchi show. I was with them last weekend. Really good episode. Lots of fun conversation. Some pretty solid alpha, if that's the word you want to use for it. So yeah, good to see you, Twinkie. I hope you're doing well, and I hope you're having an excellent weekend. Ooh, okay. Let's open the stream up with this question. Sloth, who you got tonight? Jake Paul or Platinum Mike Perry? The BKFC. Man, I am excuse me one second. I am disappointed that it is not Mike Tyson. Although, a 20-some-year-old kid fighting a 60-year-old guy, like what's the fun in that? But it would have been a spectacle at the very least. It would have been really funny to see Jake Paul get knocked out by an older Mike Tyson. Unfortunately, we're not going to get to see that, so I'm not really super following it as much anymore. But let's see. I'll go with Mike Perry. Why not? Let's go with Mike Perry. We'll have Jake Paul be the underdog. But got to give the guy some props. He is a legit boxer, even if his fights are mostly gimmick fights with older UFC people. But yeah, there you go, Dixon Sider. There's my prediction. Go ahead and put all your money on that bet because I give financial advice all the time. Oh man, good. Okay, you guys can hear me. Tracy G, good to see you in the chat. I hope you're doing well. I like the Tang Gang avatar. It looks pretty sweet. Hex S, Mr. Sloth, good to see you, Hex S. I hope you're doing well, buddy. Oh man, yeah, so it's been a minute since I've been live, and I just had the urge to pop in. Like all influencers, we only come out when the candles are green, right? Like we're never around when you really need us when the prices are down. No, but I just finished my second week of practicing dentistry as a real live licensed dentist. So I've just been a little busy, just getting used to that grind, getting my new schedule, figuring out what the new routine is. And for the channel, what I want to do is have basically a weekly live stream, kind of like what I'm doing right now, where I give you guys just access to me to be able to ask me whatever questions you want. So every week it'll either be on Saturday or Sunday, just kind of whenever my schedule allows, maybe even on a Friday. Because as a dentist, I don't work on Fridays, so perk of the job. But Friday, Saturday, or Sunday, I'm just gonna pop on live. I'm gonna try to make it at a regular time. I probably want to do it like around like 1 p.m. Saturday or Sunday. I'll pick a day and let you guys know just so it's consistent every single week. And it's just going to be an open Q&A kind of thing to talk to people, see how you guys are doing, and just provide myself to you guys as a resource. I haven't been very active publicly, but in the background on like Telegram with my private group and some of the other groups that I work with, people who have brought me on the team to help with liquidity, I've been active over there. But I didn't want to leave everybody on YouTube and publicly hanging as much. I want to be here for you guys as well. So I think a weekly show where I'm just available for you guys to ask me questions will be really really good. And I'll talk about whatever's going on that week a little bit, whatever's interesting to me, or if I have any ideas that I want to make sure I share with you guys, I'll share that with you as well. We got some more people. Hexas is in Ohio. Hope you're enjoying Ohio, man. Large. Oh, we got Access. Hey, what's up? Shoot me an invite if you want. Sure, man. Yeah, I'll shoot you an invite. Large. Good morning, Dr. Sloth. Good to see you. Yeah, I'll shoot you an email right. Email. I'll shoot you a link right now. Access. Give me a second. When is Hexecutioner coming back on stream? I don't know. We'll see if we can get him on stream. See, well, the real question is, when are you coming on stream, man? That's the real question. All right, where are you at, Axis? That's not you. There you go. Oh, I got a question. Has a patient bit you yet? No, I'm a pretty good dentist. I make sure I pull my hands out really fast when they let it bite me. That's one of our classes, hand speed. This is what's the secret to flossing around a crown molar so it doesn't come out when you pull the floss? Oh man, I hope well the crown should be on pretty tightly where you don't floss it. But if you want the secret, you push it in between your teeth and then you floss between your gums. And you know what, Dixon? Let's have a dental lesson. Uh, let me pull up an image for you guys how to floss because some people don't believe in flossing, but I do as the part of the dental cabal. I have to promote what the higher overlords tell us to, all the fluoride and all of that stuff that kills your brain. I got to make sure I promote that. Flossing technique. Let's find it. There we go. This is a good image. All right. Oh, let me open the image a little bit bigger. There we go. There we go. Present, share screen. Boom. So, very common misconception that people have when they floss is that you just get in between the teeth. And yeah, I'll get to that in a second too, Access. You just go in between the teeth and then you kind of get the food out from there, which is a great use for flossing. But really what you're trying to do is you're trying to go under the gums around the teeth right here. And that's because plaque builds up under your gums. And the part under the enamel, there's like the junction, it's called the CEJ, cemento enamel junction. The part under it, the cementum, is not as strong as your enamel. So if plaque builds up under there for a long period of time, you can get a cavity in the weaker part of your tooth, especially if you have gum recession or if you have like deep pockets because some of your bone has receded. So like what you need to do is like floss in between your teeth, hug the tooth, and then go under your gum so you can scrape the plaque off of it. Some of you might have been recommended something called a deep cleaning before, and that's just because you have such deep pockets in your gums where the depth of it is more than like 3 millimeters, which is like the average depth of it, 1 to 3 millimeters. And so we have to go under there and like scrape your root surface because your bone has receded to get the hard plaque called calculus off, which you can't get with your floss. And now for you, Dixon, specifically, what you want to do, don't lift up to pull the floss, pull it out. Like that, and then it'll just come right out, and then you won't put any upwards pressure. But yeah, when you're flossing, you're trying to floss under your gums to remove the plaque from your from the root surface underneath your gums. And then Axis asked a good question. What do you think? I think water picks are great. Water picks are really, really good, especially for those of you guys who have implants or like bridges. And it can be kind of hard to get in there with floss, or like if you have a bridge, you can't floss like directly from it. You have to like thread it through. So a water pick is really, really good. I wouldn't say it's 100% substitute for flossing itself because it doesn't scrape away at the surface, the actual tooth surface. It kind of just pushes all of the plaque out, which is good and great, and you should definitely use it, especially if you're not flossing at all. But I'd still recommend flossing, like, and I'm not super strict on it, like flossing every day, whatever. Plaque can build up pretty quickly, like within a day, after you scrape it off. So if you do it like once a day, once every other day, what I like to do is I'll have like some floss sitting like at my desk while I'm at the computer, and then I have a trash can right next to it. So like while I'm like watching a video, I'll like floss really quickly. It's not always like right when I'm brushing, and it's just, as long as you're doing it, like most people, you're going to be fine. And most people can get away with like not flossing, to be totally honest. But if you want the maximum hygiene and to keep your teeth as well as healthy as possible, flossing is good. And don't jam your gums. Like you can cause gum recession by flossing too hard and like making like micro cuts and like causing inflammation. So like don't like saw away at your gums. Just like gently do it, and everything will be a-okay. So yeah, there's our dental lesson for the day. While we are in the middle of pumping, we got to talk about what's really important, and that is oral hygiene, right, guys? Oh, hey, we got Will. What's up, buddy? I hope you're doing well, man. Man, it's freaking. Let me see if this works. Hold on, let's focus it in. Boom, boom. Now you guys can see my beautiful face. Hope you're doing well. Well, Will. Hope everything is going well. Loving the D-Chen Roundtable's consistency. Props to you guys. Aloha to you too. Hex Clan, my boy. What's up, man? How you doing? Good to see you too. Yeah, so I guess Axis is going to come on in a minute, but other than that, first off, go ahead and start throwing questions in the chat if there's anything you want me to cover specifically. But we're finally starting to see Pulse Chain take a turn, which is pretty fun after, like, what has it been? Let me pull up my chart. Boom. Let's see, what has it been? How long have we been going down? Let's go date range from here to here. 120 days. We've been going down for basically, what is that, 3 months straight. How freaking brutal, guys. And finally we got a little pump. It's that meme, we're so back after one little green pump. If you're going the weekly, it probably looks a little like, oh, we're so back, guys. But this is a pretty strong candle and it's closing pretty soon. So I'm excited. And it's been really slow, steady. If you look at the 4 hour, been pretty steady upwards momentum. Nothing like, we have this big candle right here to kind of bump us over this resistance level, and we have a lot of resistance on the chart to kind of work through. But I'm liking the slow, methodical upwards movement versus just like a straight vertical candle up. And what's cool is a lot of this money or a lot of this value transfer into Pulse Chain will start trickling into the altcoins relatively soon, especially if we start to break up into these higher levels. Like if we can get somewhere like right here ish, above this level where we were trading a little bit over here, we start trading there, that would make me pretty happy. And that could trigger another alt season in Pulse Chain. I mean, everything is pretty much just ready to rocket as soon as Pulse Chain is show some strength. I think a lot of people are kind of waiting on that to get confidence and like rebuying the altcoins with size, especially with their Pulse Chain. Oh, Dixon has a question. Let's see, thoughts on this new TikTok trend of people grinding a gap between their central incisors for looks? What are the dangers of this? I have no idea what you're talking about. I'll have to take a look at it. But my general advice: don't cut your teeth if you don't have to. keep your teeth. You only get one set after your baby teeth come out, which I assume all of you guys do not have any baby teeth left. There's some of you might have one or two. But yeah, so seeing some strength in the Pulse Chain ecosystem is definitely brought back a lot of positive sentiment. And for everybody who's still left, we're all kind of waiting for some kind of breath of fresh air, something outside of just death and destruction. Uh, Fortunately, during the downturn, there were some pretty big alt seasons that were happening during this period in time right here. We had a lot of P stable coins, PLUSD, PTUSD, I think, like a lot of them started popping off. And one thing that's been really impressive was the HOA chart. They also had their own little alt season with like Cheaton, a couple other coins dropped. But I've been very impressed with HOA overall, just how they've been holding. This is not showing the whole history. They've been holding around all-time high levels, above a penny, basically. Where are we at? What's a good one? 2 months, 22 days. I don't know where the rest of the chart is. Let's see if I can find it. 11 months. Here's a good one. Yeah, I mean, like, it's been trading like between these ranges for a little bit of time, and that's been pretty impressive with Pulse going down. So I've been happy to see that HOA has been holding strong, and I see good things in the future for it. I'm still holding all of my bag, and so yeah, that's pretty cool. Solid X has been having a little bit of a resurgence as well, which is good to see. Let's see. Found some nice support here and just consolidating again. So hopefully we can start bringing back up to all-time highs at some point soon. But needless to say, it's going to take a little bit of time for all of this to play out. I think Pulse needs to show a little bit more strength in terms of stability. So like we can pump and like sustain the new levels. And what's nice about that with where we're at now is the prices, like they're not amazing. They're not like the money that's the prices that are going to make people like financially independent, but they are enough where like, especially if you're buying some of these bottoms, you're going to be holding in profit or like around break even, which is much easier than holding like at a loss. So let's see. Are we kind of in the same boat as XRP was to me? I mean, I think the SEC news is like can be something to put wind in our sails, but I don't think we're in the same boat necessarily. Let me think. With SRP and its SEC news, it didn't really stop it from doing any crazy numbers. It still was able to pump as well as it did during the bull market, and then the SEC news of them winning their case, or the case being dropped, I can't remember which one it was. That was a big win in itself for a couple of days, and then that kind of petered out. But no, I don't really think we're in the same boat, but I do think that like as a one for one, but I do think there are similarities in that if we move on from the SEC case in any kind of positive direction, that just like lifts the glass ceiling or lifts the ceiling away from Pulse Chain. A lot of people can have a lot more confidence um, investing in it again. And it's been pretty bullish that we've been able to hold some of these levels like a second time so far out of the SEC news, the original like breaking of the news. Like we've gone through like a whole nother depression phase during that isn't even associated with the SEC. So that's actually kind of nice in a way. All right. What's up, Axis? How you doing, buddy?
Hey guys, how's everyone doing?
It's been a minute, man.
Yeah, man, it's right on cue. I think if you're planning on doing a weekend show, let's let's start it up.
Bring it back. Bring back the pure alpha.
That's right. Let's
How you been?
master evolving markets together, buddy.
Oh, I like it. I like it. I'll match that with a Monster energy drink for my
I
brand.
used to drink the shit out of the white monster, and then eventually, and then it started to give me headaches.
Yeah.
So I always have to. I always found myself having to rotate between different kinds of drinks. Now I'm on the it's called Alani, Alani,
Yeah,
Alani.
I
It's
heard
like
of it.
it's supposed to be a cleaner one. It tastes pretty good, and there's a lot of different varieties of flavor, and I don't get the crash or anything. So feels
Yeah,
pretty
man. I
good.
wanna I wanna make my own like energy drink at home of like brewing like a different couple teas together and then just like smash a caffeine pill in it and then like carbonate it. Because I find I find all of them like are really like syrupy. I don't always like it, but I'm just drinking them for the caffeine anyway. So if I can put like 200 milligrams of caffeine in my own concoction that I like, that's like gonna be the same thing.
Yeah, this is a cool conversation topic about caffeine and performance and stuff. So there's people like us that use caffeine, and there's people that don't. And when a caffeine user quits using caffeine, it does affect performance pretty greatly for a while. Um, and I know that people say that there's like sustainable ways to have like high energy, but it's just not the same in my opinion. But there are other things you could do, like a really healthy diet and exercise honestly does put you on another level. But for people that's like in the zone every day in this crypto game in these streets in Goblin Town trying to get one more unit, over the next guy, caffeine tends to be an easier, quicker way to get it done. So
When you're a pure degenerate, you need drugs to perform, right?
right, and I'm here to just full disclaimer: caffeine is yes, it's a drug. So I mean, it is what it
Oh,
is. We
100%.
it's funny how society has acceptable drugs and not acceptable drugs. Like you could argue that like alcohol is probably one of the worst acceptable drugs out there if where it can take people's lives. So, but anyway, so that's an interesting conversation. Now, when I was 26 or 7, I got on this bodybuilding program, and inside there was like a fat burning composition called, and with combining three things: green tea, which we all know green tea extract is like super good for. There's some caffeine content in there, but it melts fat, and it's pretty good for your health. And when you combine that with a branch chain amino acid called L-acetylcarnitine, um, it which is, by the way, it's like it's a compound that increases the blood flow through the blood brain barrier, so it actually makes you sharper, as well as accelerating fat burning. So those are the two things, and then the third one is the caffeine pill, right? The 100 to 200 milligram caffeine pill. So when you combine those three, I've found that mix, that concoction, actually puts my performance at a whole other level, and I've used that a ton over the years. I'm not on it right now, but you've on stream before. I've been on that stuff, and I mean, you can tell when I'm firing because of that. So Anyway, good for fat burning and good for performance.
Yeah, I love caffeine. It is great. I try to use it strategically, like a good drug user, I guess you could say. But it's kind of like it's like working on borrowed time because the way that it works is like it inhibits your adenosine receptors, which adenosine is the compound that triggers like your body to tell you that you're sleepy, and it starts to build up in your system, and then when you sleep, it gets flushed through. So it's literally like using leverage for your time. It's like you're borrowing your future time, but the adenosine is still building up. You just don't feel it because the receptors in your brain and the comp are inhibited, so the two aren't hitting together. So your synapses can't fire to tell you that you're tired. So when it wears off, that's what like the caffeine crashes. It's like your actual tiredness hitting you later. So yeah, you can use it, but it has like diminishing returns the more and more you use it, which is like the concept of like tolerance breaks and stuff like that. But also like the importance of taking a break to see like how tired you actually are and like listening to your body and getting the rest that it needs, because you keep stringing yourself out on caffeine for long enough, you're not going to get any benefit. You're not The more you drink, you're not going to get that same like attentiveness and like focus that you would if you took a break and then got back on it for a little bit. And then focusing on how much you intake as well. So like generally 90 milligrams of caffeine is 1 cup of coffee, one standard cup of coffee. Most cups that you get at stores are bigger than one standard cup, but like a 200 milligram drink that you have at like the grocery store, like the monsters typically have 200. I think this has like 150. Yeah, this has 150, but like your Celsius's, your Alanis, that most of them have 200. So that's like having like 2.3 cups of coffee at once, which actually isn't that bad. A lot of times you can drink way more cups of coffee during the day, but that's more liquid. So you get with the energy drinks, you get them in fast. You get the caffeine in faster. They
Which
don't have
brings me
like
to my next point, which is make sure you're drinking a lot of water if you are drinking a lot of caffeine so you can try to flush it and you won't get a headache.
yeah. And don't like try not to drink more than like one like energy drink in a sitting. Like you can really start messing with your cardiovascular system, give yourself heart palpitations, anxiety attacks. Like you can really screw your system up if you're drinking like 3 or 4 in a day, and especially if you're drinking more than one in a single sitting. So like, be conscious of how much you're intaking at any given point in time, because you start overdoing it and you start hurting yourself way more than any cognitive benefits that you get.
Yeah, and then I don't know if you've tried yourself, but the taking the break part, how often have you taken like a break, or do you think that there's like a suitable amount of, like every 2 weeks, every month, like how often should you like take like a 7 day break from caffeine, or what do you think?
Mm, I don't like take like scheduled breaks, but like every once in a while I'll only have like maybe 1 cup of coffee, and then every couple days I just like won't have it if it doesn't like work in my schedule, or like especially weekends too. When I'm not doing something specifically, I just don't grab the caffeine, and so I'll go like 2 days without it, just kind of randomly, intermittently.
Yeah. GT says don't do caffeine at all.
Yeah, you don't have to. It's not a necessary thing at all.
Yeah, no, I like I said, I actually started with, I don't know if you were in here, GT, but like yeah, there's ways. Obviously, if you're healthy and you're low carb and high protein and you're exercising, that's going to actually have similar effects, but it'll be like sustainable natural energy. But I was just explaining how caffeine is a shortcut and these different compounds can be combined. Yeah. Yeah. So anyway, Tam has a pretty good question here we could probably dive into.
Let's see, where is it?
Oh, I mean, what's the health thing is interesting, man. Tech GT's going on a rant.
Yeah.
Well, this, to be honest here, American carbs are loaded with glyphosate, and the amount of gluten in modern wheat is just way higher than it used to be. So, I mean, that does cause problems for some body types. I'm one of them. So I know that it's easier for me to cut out carbs, not to zero necessarily, but to limit my carb intake from time to time so that my body is in a rebound. It's always in like a sine wave pattern instead of just getting inflamed and just, getting fatter and fatter and shit like that. So, especially if you're not exercising. But anyway,
Just to round it out, Nanoboss says how a regular coffee, well, yeah, coffee's great. And as far as I know, like just like some black coffee has some health benefits as well on top of it. Um, and yeah, carbs aren't bad for you. Pretty straightforward. Like as like an inherent property, it's not inherently bad for you, and it's like a natural energy because it's glucose, it's sugar, it's the thing that your metabolism uses to give you energy. But anyways, let's get to Tam's question. Can we dive deeper into the details of impermanent loss and how it might impact my Ink PulseX farm? If I decide to let it continue running, I am still a bit confused. Sure. Pull the chart.
It says, so just as you're pulling up stuff, like, so it's a super important thing to understand that when we're talking about these impermanent loss ideas, everyone's going to have a different strategy and everyone's going to be in a different farm, or everyone's going to be in a different pool. So like the conditions by which you may or may not make more or less profit is different and varies based on those conditions. So what do I mean, or what am I saying? For example, if you were to measure the price performance of Pulse from the bottom of the Pulse chart to the highest point that it got this year, and you were to do the same exact thing for Ink, from the bottom of the Ink chart to its highest point, Ink outperformed Pulse by a decent margin. And you could take that percentage gain on those two coins if you were in that farm, and you could actually calculate out, and we'll do it for you here in a second. You could actually calculate out what the actual impermanent loss was. And for somebody that's got 5 figures in there, yeah, that dollar number isn't going to be as big as if you have 6 figures or 7 figures in the farms. But that is significant. So I gave the example yesterday on Twitter of if Ink goes up 27x, but Pulse only goes up 4x in the same time frame, you get 32% impermanent loss on that position. And so in this example, it was a $200,000 position at the bottom, and it was $100,000 of Pulse and it was $100,000 of Ink paired up in the farm. And under those conditions, which, of course, that's what happened. So roughly. So then when that first price performance occurs, if you were to pull at the top, you'd have to factor in the difference between what you could have made in profit and what you actually made in profit, because your Ink was getting converted to Pulse on that way up because Ink was overperforming it. And what I came up with, rough numbers, was your 200 grand would have been worth $3.1 million during that run up if you would have stayed in Ink and Pulse. But if you were in the farm, you actually only realized around $2 million because you lost about 30% of the potential profit you would have made. Then you must also factor in the Ink that you made during that period and what that was worth, and whether or not you compounded that back in. If you compounded it back in, you would have suffered even more permanent loss on the Ink. But if you would have held the Ink in your wallet or didn't harvest it, then that would have counterbalanced the impermanent loss you got on the way up. And so you would have had to figure out how much Ink units of Ink did you get during that time period, and what that dollar amount was worth at the peak when you pulled to counteract some of that impermanent loss. And I don't know what the historical data would have been for what you would have made in Ink, but let's just assume it was 40%. You would have counterbalanced that quite a bit. You would have made like 300K or something. I don't know. I'm just pulling that out of my ass. But so then you still were down like 500-600K from what you could have had. So if your bags are big enough and the gap is big enough, you can suffer permanent loss. But so in your example, you like the Ink PulseX farm, that one does have much less risk of impermanent loss because they're both performing similarly. You're muted, boss.
Thank you. I'll start over then. So just to kind of take a bird's eye view from it and explain it really simply, Tam, whenever you see any kind of vertical movement on a chart when you're plotting the coins against each other, so like right now I'm on the Ink PulseX, and then I've moved it to the PulseX. So Ink is denominated in PulseX here. So the higher it is, the more valuable ink is to PulseX, and the lower it is, the more valuable PulseX is relative to ink. So any kind of vertical movement to the up or down on this chart means you're experiencing impermanent loss. So if the chart is going up, that means you're getting more PulseX and you're losing ink. And if the chart is going down, you're getting more ink and less PulseX. So when you're thinking about farming, the most ideal state is for it to be going sideways, which funny enough, we've been seeing for the past, what is this, probably a couple months. So like this has been a really ideal time right here to be farming these two, because you're essentially earning ink while holding the same number of coins or maintaining the same value in coin terms between the two. However, during this whole period right here, you were technically losing because you're experiencing more losses than if you just held. And then the same, but to a different degree here, where you are accumulating more PulseX on the way up. So on the way down, you're accumulating ink. On the way up, you're accumulating PulseX. And so the USD prices that you would be experiencing will be muted relative to if you were just holding liquid. Now, like Axis was saying, the money that you're making in ink could be offsetting that. But generally, if you're going for the maximum amount of value of accumulation, anytime you think one of these moves are about to happen, or if you're in the middle of one of those moves, you want to be liquid during those periods of time. Now that's really hard to predict when it's going to happen and for how long it's going to happen. But like the most ideal way to play this chart was to sell your ink for PulseX here, buy ink with PulseX here, and then LP it here. It's essentially from a macro view, that was the best play. The question is, how confident are you that you can make those moves at the right time? Because if you make it at the wrong time, let's say you go down here and then you sell it all for you sell all of your PulseX for ink here, and it keeps going down. Well, now instead of holding both or holding the right one, you're holding all of the wrong one. At least with LP, you're still holding some of both of them, so you have exposure to both assets prices. Even though you get more of the one that's doing worse, you still have some of the good asset on the side. But also another thing that I like to point out is that when you're doing these trades, or you're trying to move in and out of liquidity positions, you're not earning income while you're doing that. So income and price appreciation are two very, very different ways to increase your net worth. So even though you may, in Axis's example, there may be like, what was it, like a $500,000 of difference between point A and point B of liquidity providing in terms of what you would have had at the end. But during that entire time, you could be slowly selling your ink off for real life income to bring into like your bank account, right? And that's not something that you could have done with just holding your coins and then waiting to sell at that last period in time. So that's a factor you have to consider. So maybe, yeah, at the end of this, whatever that period is, let's say it's 2 years, you have $500,000 less of value, but you're able to fund your lifestyle through that 2 years versus having to hold those coins liquid and not selling any of them, because we're making the assumption that you bought at the right time and you sold at the right time. If you sold anywhere else in between, then you would also be experience a gap in value just the same as you had with impermanent loss, because you would no longer have the coins which are appreciating in price at the same time. So that income that you have can be a very powerful tool to keep you holding over a period of time, even if the maximum gains, if you calculate it out retrospectively, is not like the highest it could have possibly been. And the chances of any of us hitting that are pretty low in the first place. So what I like to do generally is a percentage of your bag is for LPing, where you're getting that income to take into your real life or compounding, whatever it might be. And then you have your liquid bag that you're holding for the maximum amount of price appreciation. But if you don't have enough for both, then just pick the one that you feel most comfortable doing, and that you can sleep at night easier with that position. Because the thing that you're most comfortable with is the thing that you're going to be able to hold and maintain that position for a longer period of time.
And then if you want to throw up Good Textures comment, so you want to farm during price stability and hold raw during coins during moon missions, and that's. So there's two like thought processes on this, and Crispy from Paxfire.io has done like a deep analysis on this. He made some assumptions about what ink and pulse would do during the cycle, but we used the performance of ink and pulse off their lows and to the local high back in March as a basis for what could happen for the rest of the cycle. And under those conditions, if you were to sit in the farms for 1 year and not compound your ink back in, just hold it liquid, that strategy would outperform sitting out of the farms, and it would outperform compounding. Yeah, and he's got a PDF document of that. So assuming prices play out similarly, that's the play. You have to be super long term on the farm, and you have to hold your rewards liquid or until the very peak. So there's a bit of timing the market in any case for maximum profit. But I want to remind everyone that don't be a profit maximalist. Just enjoy the gains. Like, to your point, if you're in a farm for a year plus and you're making money on pulse and you're making money on ink and you're making money on your rewards from the farm, just enjoy that process. Yeah.
What was I going to say about that? There's a point that I wanted to make. Oh, that makes sense, especially when you're in these farms where half of the LP position is in that reward token, and in this case, incent ink. Because when ink starts to outperform, then now you've accumulated a liquid bag that gets 100% of the price appreciation. But when you compound, you sell half for the other, and then you expose that yield to impermanent loss again. So for something like the ink farms, like, compounding, typically we think of as like this is better for our long-term returns because the APR goes up. And that may be true if the reward token is not part of the tokens you're LPing with. But when it is part of the ones you're LPing with, you're mitigating one side of the impermanent loss. And you can even take it a step further and then sell a part of it into the other one too. So like ink, sell a little bit into Pulse X, maybe 25% as time goes on, and then you mitigate it both ways as well. I'd be interested to see if there was a ratio that outperformed it over time. If Crispy would model that out too, that'd be pretty cool. Like,
yeah. Some other thoughts on this is like when you go into the ink farms right now. Here, I'll pull them up just so we can have a visual. Okay, so when we go into these farms and we see that you're getting about 40%, this can be between 40 and 50% APR on this example of the ink pulse farm. Let's assume that it's 50% for easy math. This calculation is based on the dollar value of ink, not based on the number of units. But let's just assume that it's 50% because that's where it's been historically for easy math, and that's we're talking number of units. Well, if that in that example, if ink's going to overperform by such a huge margin like that, but you're earning back you're earning back half your stack of ink, and that ink then does a 2x and you hold it liquid, you just earned your entire stack back in value. So all you need is 1 year in the farm and for ink to double over your cost basis for you to be made whole on the whole deal in terms of like way profitable. So it's super easy to do with the Ink Pulse and Ink Pulse X farms. Easier with Ink Pulse, but the impermanent loss is less on Ink Pulse X and it's a little more on Ink Pulse.
Yep.
But if you like Pulse, then that's been my thing the whole time, is like, if you like getting Pulse, then you don't care about that because you know that Pulse is like the base coin, the gas coin that we all want and need and strive for.
Yeah. Another thing to keep in mind, and this doesn't apply to most people, but it could apply to you. I don't know who's watching. Also consider a lot of the people who are in some of these farms have more coins than they could like reasonably sell. Or like they don't want to put that much sell pressure on the price chart. So putting their coins in these farms, they can earn a lot of ink, and that ink will probably be more serviceable to the market in terms of selling out into like stables versus just dumping their bag. So it's a way for them to make their coins productive, even though they might not be getting the maximum paper gains, but they would never be able to realize those paper gains in the first place because they're just so big. And this is good for everybody to keep in mind, especially if you're getting into altcoin ecosystems and you're able to accumulate large positions early. That's when you start to play. You're shifting your thinking in terms of from like a retail investor to more like a market maker whale. Like the two mindsets are very, very different in how you use these tools, because your impermanent loss when you're more in the market maker slash whale position is a lot more favorable to you, because that's how you're able to accumulate value without selling your tokens, which you can't because there's typically you're the person who's providing most of the liquidity in the first place. So you're just kind of moving coins from one side to the other. So it's a way for you to accumulate value without it's a way to it's the way to accumulate value actually. Yeah.
Yes, and then this conversation, when you're trying to calculate maximum profitability on this stuff in the farms, it gets really difficult, and especially when you're talking about exotic pairs, like on like the 9-inch farms or the 2 fucks gauged pools and stuff, because there's so many different rewards coming at you with different independent prices of all these different rewards you're getting. So it can get really hard to calculate consistently over like a quarterly basis, like what your returns are going to look like, because there's so many variables. But my statement to that is, for most of us that's listening to this stuff, you guys need to stay in the core Richard Hart coins and just protect your coins. Like just make sure that you have more of everything that you is to the best of your ability in terms of coins. And then, maybe take 10 to 20% of your stack and put it in stuff you believe in, or put it in founders you believe in on this chain, people you want to support. And then putting that stuff in farms or gauged pools, it's fine if you like everything that's in the pool. If there's something that's in the pool you don't like, I wouldn't go into those pools then. Only go into pools that you really like all the coins, so you don't really care so much if you end up with more or less of one or the other. And with that as well, maybe my last comment would be, in the case of a coin that's has a history of like crazily overperforming everything else, maybe you want to keep some of that liquid in your bag and not exposed to impermanent loss anywhere, because there will be periods where that thing could shoot up 10x in a day. So you may just want to keep some of that in your bag.
And it's really those fast explosive movements over a short period of time where the impermanent loss is really hurting you. The gradual grinds up are not as severe because you have more time where you're earning. But basically, those moves that you're talking about, like a 10x in a day, if it is that drastic, it's basically a market maker saying, "Hey, we're done with these prices. We're moving up," and they're just buying your coins off of you and saying, "Like, here you go. We're cashing you out, and we're moving to the next price level." And so that's really like the situation where impermanent loss gets you bad.
And I think part of like trying to calculate and expecting those types of things coming would be doing, this is deeper than most 99% of you want to go, but if you do some supply analysis on coins like that do have a history of doing that, what you want to look for is for like the top 50 or top 100 wallets to be rock solid holding and have a history of doing that. And then once you see like the few little straggler weak guys that have liquidated their positions out, then it would be a signal to you that, okay, chart's starting to flatten out. Top 50 holders haven't moved coins in so long. They've or 3 out of the top 10 have been accumulating. These are the kinds of things that you're going to look to say, okay, maybe they're about to mark the price up because there's a shortage of supply at that supply line, and so it's time to mark it up.
Yep, pretty much. Couldn't have said it better myself. Yeah, man. Well, what else has been on your radar? And anybody in the chat, if you got questions, we just did a solid 30 minutes on one, so don't hesitate to ask questions.
I mean, I could just do a quick little TA sesh for the peeps, sure. And you can give me your 2 cents on it if you want.
Yeah.
Because the hex derivatives are starting to move, and that's something that we always used to talk about on Pure Alpha. So that's interesting. But I think we should start with the foundation, which is Pulse. So everything on Pulse chain performs relative to what Pulse is doing. That's just kind of how it goes. And this is a weekly chart. And if I zoom in here, I'm not on log. That is quite the beastly back-to-back weekly candles. And this weekly candle closes tomorrow night at 8 Eastern. And it came off of a hammer. So these hammer candles on the weekly, those usually signal a reversal. And I know Hansi was on Twitter right away saying this is one of the strongest candles he's seen. I think he was referring to a monthly. Let me double check though, because I don't want to misquote him. Okay, so he was talking about a weekly, but this here is the monthly candle, and this is turning into one hell of a hammer. So let me remove these data points. Yeah, that's going to be, this is about as powerful, if this is actually more powerful than this kind of reversal tweezer, reversal hammer candle. So I think the bottom's in. No, I don't know exactly if we're going to go straight up or going to consolidate in a sort of a range here for a little bit, but in terms of like, I like this 3-day chart. It's my favorite way to kind of look at the pulse chain right now, because 3 days is usually a good indicator of is a pump going to get rejected immediately or not. And this has been brewing in the charts for quite a while, and I'll show you why. So number one, RSI made a slightly lower low and then just bounced hard. Anytime that, so what this indicator does is it shows you the relative strength of the market. Anytime that you cross below this 30 level, that's an oversold condition. And it did make a slightly marginally lower low here on the 3-day. And as soon as it did, it bounced right out. And I mean, this is like with force too. So seeing that coming, it's hard to trade the RSI other than say anytime it goes below 30, I'm a buyer, and anytime it goes over 70, I'm a seller. It's kind of how you could think about that, generally speaking. And you can see that when it went over 70 last time, that was a signal to sell. Just as it went under 30 this time, it was a signal to buy. So the RSI, pretty simple tool, nothing really special going on there. One thing that I've been keying into that's been very, very interesting to me is the historical volatility and how it has been bouncing around inside of this falling wedge. So whenever you see like a triangle shape like this pointed down and to the right, this is called a falling wedge pattern. And typically you'll see a price pattern like this in price analysis, but you can also use the same kind of analysis for data points like the volatility. So the volatility was coming down here, bouncing around, squeezing, and the price was getting flatter and flatter and flatter, and getting squeezed into a smaller and smaller price range over the 3-day candlestick. And what happens is eventually you come to the reversal point. That's why I call it a bullish reversal pattern, because it's an indicator that the trend, that something is brewing. So if I'm looking at price, it's basically implying that price is going to explode to the upside. But in this case, we're talking about volatility. So we don't know if price is going to go up or down. We just know that there's going to be some fireworks coming, because the volatility is getting squeezed, and the price starts going like this and going flatter and flatter and flatter and flatter and flatter and flatter and flatter until you get to this point right here, and then it starts to pop around like that. And that's where the volatility comes from, because it can be down or it can be up, but that's what that's signaling early. So you got this brewing from March all the way until June. So this gave you so much time to for this pattern to build up. And then boom, as soon as it crossed and broke out, and there was a small sideways pattern or small sideways area here. And sometimes what you'll see is it'll break out, retest, and then go. But this one didn't. It just went break out, consolidate, and then explodes even higher, which is even more bullish. But in this case, it's just signaling that there's even more volatility coming into the market. So then it's like, okay, well, we know that this has been brewing for a big move. We don't know the direction. So how do we find the direction? Well, part of that comes down to the MACD. And the MACD is made up of two lines, the blue line and the orange line. The blue line is fast. The orange line is slow. Anytime you get the blue line to cross over the orange line from these lower quadrants, that's a bullish cross. Anytime you get the blue line to cross the orange line from up high, that's a bearish cross. But this is a lagging indicator, so this stuff will cross, but it won't confirm for maybe like 5 to 7 days until afterwards. And there will be times where it'll fake out. Like, look, it looks like it was going to cross here, but it didn't cross. And there was a continuation of bullish momentum for a very short time of about 2.5 weeks. And this is when Pulse ultimately made its high. Had you sold here scared, you would have not sold for max profit, for example. So it's important to let these to not solely rely on the MACD because it's a lagging indicator and it does throw false signals. But when you combine this bull cross with this steadily declining bearish volume and increase of bullish volume with the bull cross with the historical volatility breakout, okay, we know the direction now. The direction is going to be up. So you need to combine these indicators in a way to get more clarity on what's going to happen in the market. My last piece of this would be that the bars is the other element of the MACD. Deep green and deep red is a strong trend. Light red, light green is a weak trend. So what you look for in the bars is a climax. And you can see here there was a climax in about a week and a half or 2 weeks of sideways here, where the MACD bars started to flatten and then go back the other way. So this would have been signaled to you that, okay, selling is starting to slow down a little bit. It doesn't mean the price is going to go right up, because look, even though the climax happened here, price still dropped an additional 61% from there. So it doesn't mean that the price is going to stop dropping. It just implies that, okay, now is the time to start to get interested in the future weeks of a potential buy opportunity. And when that comes in is when this blue line starts to flatten, the fast line, and it starts to approach the slow line. And you can sometimes anticipate a cross coming and then start to make DCAs in, especially when you couple that with massive downside. Like, okay, it was already down 79%. So it's like, okay, volatility is about to break out. Bullish cross is coming. RSI is flattening. Okay, you got the signal here on the 8th. You could have bought on the 8th when that signal came through on the RSI, combined with the bull cross already happened, combined with volatility entering the market. So that's how I analyze pulse and a lot of charts, really. I like those three indicators and that mashup. It usually gives a pretty good indication of what's going to happen days or weeks in advance of it happening. So this was easy to see coming, but we just had to wait for confirmation. That's Pulse. Any comments you want to make about that before going to Pulse X and Inc?
I think I'll just reiterate the point I was saying right before you were hopping on, but just the fact that we've gone through two pretty huge depression phases in the pulse chain market before even getting a real explosive move to the upside with what's the word I'm looking for, with substantial exit like 5, 10, 20 X's, breaking above all-time highs, etc. To me feels pretty bullish overall. I mean, I don't want to say it exactly, but like, it can't get too much worse. I mean, the people who want to sell have pretty much sold, and you see that by like two very, very steep sell-offs, both the SEC sell-off and then this previous sell-off for the past like 3 months. So the market seemed like it was pretty due for, at the very least, a relief bounce. But overall, like, it gives me more confidence seeing like two big sell-offs and we're finding support in the same place, just as like a macro view.
Yeah. And also to your point about sell-offs, this sell-off from the launch was like had a way steeper slope, and then you get max FUD, super steep slope. And then this was not just a clean rounded bottom. This was like, sideways, breakdown, breakup, breakdown, breakup, breakdown, huge breakup, chop, 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 chop. I mean, there was no real nice rounded bottom. So this crazy volatility in here, this was, chaos. Whereas like this sell off was nice and smooth, rounded bottom, setting up for massive explosive growth in the coming months. And you can see that by the shape of this kind of parabola that I built out here. The other thing I wanted to say about just general analysis, like you guys are getting all the details today, the volume. So at the bottom down here, volume is important because anytime volume decreases, it gets to like a minimum point, and then what happens is there's an explosive breakout of volume. So you go decrease in volume, sellers exhausted, massive breakout in price. Look at how long we've had for this volume to decline. Volume's been declining since end of March. And now the price is going up. It's up like what, 35 to 40% in the last 3, 6, 9, 12 days. But we haven't seen any explosive move on volume yet, guys. So when this thing finally does fucking pop and there's like a nice injection of volume, this thing's going to go like that. It's going to pop hard. I'm not saying that's going to happen tomorrow, but this is a really, really nice setup though. And that's partly why you're getting this nice curve rounded bottom. So anticipate big volume days coming. Last time was, so we had a $38 million day here, 33 million, 28 million, 40 million, and then the peak was 66 million. And right now we're trading about 1 million a day. Isn't that crazy?
That is pretty crazy. It's definitely gotten me excited. I'll tell you that. And even if we level off like 20, 30% above where we're at now and chop for sideways for a bit, like I was saying before, it's really not like it's much easier to hold a little bit higher than it is now to wait for, say, that liquidity injection, spike in volume, whatever it might be, especially for those who have been buying in the past like couple weeks to months. It's much easier to hold at break even, small loss, or even a small profit than it is while things are just bleeding down.
Yeah, it is. And it builds confidence in the market. And that's partly what's happening right now is the with the ETH ETF coming on Tuesday, this is the confidence builder mode. Like the whales know it's time because they know that you can verify the amount of whale money we have of pulse chain believers. At a minimum, you could look at the SAC address, but there's many, many more whales that you can verify on chain have lots and lots of ETH. And so if ETH is going to get an ETF and it's going to perform in the wake of a Bitcoin ETF, ETH could be seeing prices of anywhere from like $15,000 to $30,000 a cycle. And that would bode really well for millions or even billions of dollars crossing that bridge and entering the pulse chain for the leverage for the extra gains that you'll get over here in this much more smaller market.
A new hypothesis or a new potential like way things could play out with like the big ETH bag that the SAC wallet has, that I thought would actually be pretty cool if we saw. I think like the common like the going theory on how it's going to be used is the ETH will be bridged over and then used to buy up Pulse chain like directly, kind of tying the price of Pulse to ETH really well. But I wondered, like, what if we get like super high ETH prices and then the SAC swaps it for like stables and then bridges the stables over, basically just like vampiring, attacking the value that goes into the ETH price, taking those stables and bringing it over to Pulse chain, kind of creating a similar situation that Hex was in before, where the vast amount of the liquidity is in stables versus like another volatile asset.
You just gave me the idea that if something like that were to be done, why wouldn't that wallet turn all that ETH into a stable coin that's native to Pulse chain?
Mm-hmm.
So maybe that's on the roadmap, is some Pulse chain's native stable coin. In this case, I don't think it'll be Coast. It'll be some other new one. Not sure. This is speculation, but some native Pulse chain stable coin. Why wouldn't you siphon off value from another chain and put it into a Pulse chain native stable? That does make sense to me.
Mm-hmm. Yeah, if you back the native stable by the bridged in stables or the stables on Ethereum, yeah, that could work.
Yeah. There's a couple different ways that could go. If a lending protocol native to Pulse chain allowed you to deposit wrapped ETH from Ethereum into the protocol, and you could create mint stablecoins from the collateral, the SAC wallet could just create a massive war chest, stick it in a lending protocol on Pulse chain, and produce mint stablecoins out of thin air. And then, but yes, they would need to be
backed by something
to help support. Well, as long as that, let's say it's $1 billion of it, $1 billion of the stable. If anybody else wants access to those stables, they're going to have to swap something for it, which should also help stabilize the peg as well. I would think, because the chances, well, there's a lot of money on this chain. So yeah, it's working that math out is interesting. The easiest solution would be to pair it with other massive stable coins. But remember, MakerDAO's DAI started with very small amounts of ETH with collateral backing it, and it wasn't necessary. It didn't have these huge liquidity pools between it and USDT or USDC in the beginning, because it was the USDT was the only one, and there wasn't a lot of USDT on the Ethereum chain at that time. And so there were periods where DAI did depeg. But generally speaking, the bigger the collateral backing, the harder it is to depeg the asset, because you could just burn portions of that away to get the underlying asset. So like what you could do is, instead of depegging something to capture something through selling, capture the stable through selling, you could just convert your value of this new stable into, just return it to the contract and then get back the ETH that was deposited.
Yeah, and I think if that were to happen, we'd probably see a new farm with that native stablecoin and Pulse, and a decrease in the farms of the bridged-in stablecoin, so that the price of Pulse is more dictated by that new stablecoin. It's probably what we'd have to see for that, if that played out. And again, this is just a thought that I had that I wanted to share with everybody.
It definitely is thought-provoking.
Mm-hmm.
So Pulse setting up for a big move. You know, is it going to be tomorrow, or is it going to be in a few months? I don't have the answers. I just think this price action looks really solid off the floor, and PulseX is respecting that. So you'll hear me say this all the time, that I don't care about the dollar chart for any other really coin on Pulse chain. I only care about how many pulses it worth. But for the sake of just, you know, starting on first base, PulseX has held up better than Pulse in terms of dollars. It's held up. It came down and tested these levels here from this resistance, and it perfectly V-bottomed out and bounced off that level. And if you go to Pulse, it did not. It got rejected. I'm sorry. This rejection point here, that did not act as support. It fell through and went an additional, like, I don't remember how much lower. It was like, I want to say it was like 20% or something. Oh, wow. It went 40% lower. It went 42% lower than that. So Pulse underperformed that period, whereas PulseX held up better. And the signal here is in looking at PulseX, not against the dollar, because this is just reflecting the Pulse valuation. You have to look at the Pulse valuation. So go up to here on your charts and click that little button and stop viewing your Pulse chain charts in dollar terms and view them in Pulse terms. And this shows you a completely different story. This shows you that since the bottom on January 1st, PulseX has done nothing but go up against PLS. And this is something I've been covering in the private group since the first bottom back in September. We've been covering this relationship. And I've been saying for a while that PulseX is going to go 1-to-1 with Pulse. And it's obvious. It makes total sense, because Pulse inflates. PulseX does not inflate. It's actually getting burned away. And $26 million of it has been burned so far. And more every day. That's about 4.5% of the circulating supply. And so, I mean, it's just simple math. PulseX is going higher against Pulse. And right now, just as of yesterday, it broke out and made new all-time highs against Pulse for the first time in history. So PulseX is the darling. It's going to go a lot higher in Pulse terms. Eventually, I think it'll reach 1-to-1, and it could even go beyond. So do not be surprised if PulseX, if you swapped your Pulse for your PulseX here, if you double your Pulse bag, because this thing goes to parity. From here to here, it's a 2x. You double your Pulse. So now that opportunity is leaving us by the second, because people are understanding this and they're taking the trade. Now, Inc. is a little bit tougher, because you know, it overperformed so hard to the upside already, and then gave us this whole period of time. So it gave us a time to farm here, and it gave us a huge period of time here to farm. And these are when you want to be farming, in these sideways periods. And again, I'm not looking at the dollar chart. I'm looking at how much Pulse is one ink worth, and currently it's around 59,000. But this range is pretty big. It's from a low of like, let's say 40,000 to a high of 60,000. So that's like a 30% range, I believe. It's pretty big. It says 38%. So once this thing is gonna threaten a breakout to the upside, like it is right now, I mean, you don't really, depending on your strategy, this is not the time to be in the farm. And so what we've seen is a lot of bigger players have actually quit the farm on the ink pulse pair because they don't want the impermanent loss. And so they're just going to let this thing mark up. And by the way, when these big players, they pull out of the farm, guess what that does? It makes the chart easier to float up because there's less liquidity blocking the price upwards trajectory and momentum. So it's a self-reinforcing system. And, right now we're looking at a potential breakout here of ink versus pulse. And the target's probably somewhere up here between 100 to 120,000 PLS per ink. So at least a 2x over pulse. So if pulse is going to do a 4x, ink's going to do an 8x, just on that basic math. So PulseX and ink, man, those coins are the RH coins to own currently. They're proving that. And so then that brings us to our last chart here in terms of those top three, which is ink versus PulseX. And ink has been actually declining in PulseX value. Why? Because PulseX is the darling. It's headed for parity, and ink is having a hard time overperforming it currently because a lot of the bid has been put on PulseX. And that's because I think, partially it could be because ink is inflationary and rewards are being used to buy things people like. And PulseX is just outpacing that in terms of price appreciation. So what I would look for here is this kind of action where it goes flat and then builds up. But this time, if it does it, maybe sometime by middle August, we're going to have to do the test again. If it tests this time, ink's probably going to rip just because it is much smaller in market cap. It's being held majorly by the top like 80 wallets. So it's definitely not as distributed as PulseX or Pulses.
The routing on these coins is really interesting too, because if anybody's buying PulseX or ink, it's getting routed through Pulse first, especially if they're bridging in new values. So if somebody like say bridges in ETH, they have wrapped ETH, and they want to buy PulseX or ink, it gets routed through the wrapped ETH Pulse pool first. So it pumps Pulse price, and then it pumps, which inherently pumps PulseX and ink because their prices are derivatives of the Pulse USD price itself. So then it takes that inflated Pulse price and then buys the ink of PulseX. So if money's flowing into the ecosystem and into those coins, it is pumping Pulse technically at the same time. Pulse is kind of like the basket of value. It's where Pulse is the store of value. It's the place where the value is stored, literally in terms of wrap Pulse, wrap BTC, and the stables. And then everything else is deriving its price from that ratio of Pulse to those value backing coins.
Yep. I'll just reiterate it too. So if ETH is trending up in price, but you bring the ETH onto this chain and you dump it for Pulse gets a pump. And then obviously then you dump the Pulse for, but then you dump the Pulse for ink and PulseX. So what that looks like is ETH gets sold, Pulse gets pumped, then it gets slightly dumped for a pump on ink and PulseX. So it's like you get a little, yeah.
It doesn't really dump in dollar terms because it's not being sold against the thing that its price is being derived from. So it's dumping relative to ink and Pulse, but like the dollar value of its appreciation stays the same because Pulse's price is not dictated by a ratio of ink to PulseX.
That's exactly right. So again, in dollar terms, this gets benefit and this gets double benefit. Because this is amplifying the pump that Pulse already got. Because remember, these things are getting their price from the amount of Pulse is worth. So what happens is, if you're going from ETH to ink, Pulse gets pumped, which increases the price of ink, and then the Pulse gets sold for ink, which doubly pumps ink. For example.
And this is like when people talk about leverage on top of something, this is exactly what they're talking about. This is what like leverage on top of Pulse means. leverage on top of hex. Like when people say leverage on top of this mechanism is pretty much the reason why. And it works in the reverse too. So if people sell ink and pulse X to get wrapped ETH, well, they're going to dump the ink price relative to pulse, and then they're going to be dumping the pulse price relative to ETH, which affects the pulse USD price. So it's like double sell for ink technically. So it works in the reverse too. Which is why
you get those massive drawdowns and pop. That's why this happens.
Yep.
Cool. Oh, that's, I don't know. Do we now? Let's go into hex and some derivs and then call it.
I think so.
Yeah. So hex was looking super good against pulse here. It did this huge falling wedge. Remember, we showed you that earlier on the historical volatility for pulse. Same thing for price. Once it broke out, it had a massive move to the upside. It ripped up about 75%. Actually called this breakout right here before it happened on Crypto Coffee's stream back in April. And so then that broke out, and then we got like a slow bleed and fade. And look, here's an example of why I think the sellers are getting exhausted, because over 60 days, $38 million of volume traded, but the price only went down 32%. Whereas just lately, in 12 days, we went up 20% on $5 million of volume. So this is this imbalance in the marketplace where the sellers just can't push it down over time. And then with very little volume, it goes back up. This is why it's a very one-sided trade. And the hex is going to be easy to move this cycle now, finally. But yeah, currently we're getting a slight sell-off on hex, which is fine. Like this, I mean, the hex is going to have sellers the whole way up. But in terms of structurally, we had a low, and now we put in a higher low, and it was right at the 786 fib retracement. So this is perfect. I think the target is going to be up here to 382 on this move, and this could take months. So hex will move slow to start, but once we get up into these zones, I'm very anxious to see what happens.
And just keep in mind, hex has the same relation to pulse as ink and pulse X does, based on the pulse X farms. You'll have the liquidity set up.
Yep. And one way I like to view this is if you go to what am I looking for? Liquidity. No, not liquidity. Bubbles. Where's bubbles at?
Coins.
You go to bubbles, and then you click the liquidity tab here. It shows you which one's the least liquid, which is the least liquid coin can be the most volatile, typically. So, obviously you could look at this relationship here. Let's say that, Pulse is our base unit, 30 million bucks. There's a little bit more in the ink farms. There's about 35 million. There's way more in Pulse X. It's the heaviest one, $49 million of liquidity there. Hex is the smallest one, the little baby with only 24 million bucks. So theoretically here, hex can move the most in either direction. Pulse X is going to be way more of a momentum-based trade. That's just going to be like a freaking Cleveland steamer. It's just going to steamroll in either direction of whatever the trending direction is, because it's so heavy relative to these other little ones that can move more independently of what Pulse is doing.
Makes sense.
EHEX, I know we do have some EHEX believers. It just got a breakout on the RSI, and that's good. And the bull cross came in way back here in April. And so I think EHEX is artificially undervalued currently, and that EHEX and PHEX will both perform similarly this cycle in terms of percentage gains. That's my belief. I don't want to really go into the philosophy yet because I don't want to give away all the alpha, but if we view EHEX in hex terms, I mean, it has gained against hex since its lows here. From the wick low, it's up 140% over 130 days. From the high, it was up 240%. So you could have gotten 3.4x more PHEX if you would have sniped the bottom of that hysterical crash on that. And so, like, what I like to say is, like, this is what true value was EHEX was in this kind of pennant pattern. In my mind, EHEX's fair value is 2 to 1. Like, that's where the market had it. It's just that one event that kind of shoved it down weirdly. And just imagine that had not occurred. Where price would be somewhere up here. Like you just assume that that never happened. We would have actually went up and made an attempt to go to parity. So in my belief, EHEX is still tremendously undervalued, and it has upside against PHEX throughout the cycle. And then the hard part about this one is going to be timing it. So it's that's a treacherous game with EHEX, but it doesn't change the fact that I think that it'll end up being that peak low to peak high will be relatively similar to what PHEX does.
Yep. Yep. Well, that's the thing with all the ratio trades. It's all about timing. You got to time it pretty much perfectly, or right around perfect.
Yeah. And so because the hexes have been performing quite well, Hedron is starting to get a pump. Hedron is up 72% on the Pulse chain, and let's see what it's doing against on the ETH chain. It's up 72% on the ETH chain as well. Interesting. It's up the same amount on both chains. So maybe the market's pricing in V2. Perhaps, I don't know, but I like to see that.
Can't wait for that.
And you're not going to get a lot of signal in this down forever Hedron chart, but if you view it in EHEX terms, I mean, Hedron has just continued to make, this looks a lot like that PulseX chart. Hedron just continuing to make higher lows for months and months and months, going all the way back to November. What's this going to look like? September rolls around, October rolls around, November, December, January next year. Are we going to get like a nice pop on this? I don't know. Definitely looks good, though. It definitely looks like there's been some accumulation way off the all-time lows that never quite got back down there in EHEX terms. So
it's holding its value relative to the thing that gives it its value, which is all 100%. You can hope for. The USD price tells a very different story, but this chart tells a completely different story. So it's succeeding from a zoomed out view in its goal overall, even though the USD price is pretty wrecked, which is it is for Hex too, which you wouldn't expect anything different. And then the stat that I always like to bring up when talk about Hedron for people is, a billion Hedron is the same as 160 T shares staked out for 15 years, and then minted at the end of those 15 years. So whenever you're buying a billion Hedron, that's what you're buying.
And if you just take a measured move here from this range, which we've been in this range since February of 2023, back when Sloth and Silver the Antidote and me were making videos and shit. It's been just going sideways inside here. If you just take that measurement from whenever it's going to happen, I'm not trying to time it. I mean, you're looking at a potential 6x here in EHEX terms. So if EHEX goes and does 20x, well, then you got to multiply that by 6, and that's your realized gains in EHEX terms. So just in the same way that PulseX and Inc are leverage on Pulse, Hedron, Icosa, and Communis are leverage on Hex. So if you want more Hex, you can use these little guys. What's that?
Which is leverage on Pulse now.
Yeah, and I mean, that's the thing, is like it's all leverage on each other. In a bull market, it's fun to play those games. It's a way to multiply your coin counts. And then lastly, for the Hex coins, I'll show you Communis, which is the one that's near and dear to my heart. I'm a huge fan of the Quadfather class, which is people that have 1 quadrillion Communis. Last I checked, there was like between 130 and 140 quads out there, and 60 to 65 of those was held by like rock solid top 20 holders that don't sell. They just accumulate. So why is this important? Well, because if we want to stimulate the automatic marketing of long-term Hex staking behavior, one way to do that is to give people an instant rebate. And how do you do that is create price floors on this chart. And this isn't the full history. As a matter of fact, the PCOM price chart started down here and did something like this and then built up. So it's super high up off the lows. I could pull it up, but I'll spare you guys. The point is that in the last 140 days, it did a 152% move over 36 days with only $23,000 of volume. So because of the illiquidity and the rarity and the class of holders that does care about this thing and does see the possibility of it becoming automatic marketing for Hex, I think this thing has massive upside potential. I'm actually projecting that it could do a 200x from these lows on this floor price, because of that very fact that there's people that believe in it, right? That want to buy it and they want to hold it. And so, just even on July 5th, just a couple weeks ago, it was only $5,000 for a quad. But today up here, it's now $13,000 for a quad. Up here, it was $87,000 for a quad. 87,000 just here back in February. And so this can escalate quickly. And so I would, if this is an interesting trade for you as leverage on Hex, you take advantage of it. If there's a pullback, buy the pullback, because it will likely put in a higher low because of a shortage of coins. The only way that you get more Communist coins is if more people stake Hex 5555, lock those coins up for 15 years, mint a start bonus, and then dump them into the supply. And last I checked, it was given like a 5% rebate. So we're not at the point where people are going to make 5555 stakes for the COM, because the value that they're getting back is 5% of their opportunity cost. But if that got to like 20, 30, 40, 50% at some point in the future where COM became ultra scarce, it would act like a magnet of enticing people or bringing people into the long-term Hex staking game, because they're going to get a portion of their value back. And that's the ultimate goal, is to get, not only to get people to stake long and get a bunch of their value back in COM, but then to use that COM to then pump the Hex price back up and do it over and just cycle that through, so that you could get a lot more Hex through the value of COM. I've looked at Helgo before. We'll look at that as a final one. I haven't looked at it in a long time, but it's pretty much just leverage on Hex in the same way. Let's look at it in Hex terms. Oh, nice.
Look at Helgo. I haven't seen the Helgo chart in a while.
So it's up, it's up like 25% off the lows. Nice. 150 days. It's had $559,000 of volume. So it directly benefits in volume. It would have been cool if they would have designed this coin with some sort of a small tax inside of there to help also additionally give rewards back to holders without having to go stake through the protocol and all that. I think that's one of the big innovations with the PTGC ecosystem is, and like something like Die Hard, although I think that tax is a bit high, these tax coins that are effective and they work on Pulse Chain, like they're rewarding the users just for having them in their wallet, which I think is super cool. But yeah, so to your point about Helgo, it's just going to do what Hex does. It's super tied to it. And it does have pretty damn good volume because there's so much Hex in here. I think it's almost 100 million hexes in here, 91 million. It's a shitload.
That's a lot. And the account's pretty funny if you see him on Telegram. All right. Well, thanks for that. Thanks for that rundown, Axis. I appreciate it, man. I think this was
welcome.
A good catch up.
For sure. Hopefully we can get doing this more regularly again.
Yeah.
And welcome back to the boardroom, my dude. And thank you for your support and participation.
Yeah, of course, man. Happy to hang out whenever I get a minute to stop in and.
And congratulations. More than anything, congratulations again. Thanks, for making it through school, and now you can clean my teeth.
Yeah, man. Just
you're not that far of a drive from here. Yeah, honestly I should do that because I need a teeth cleaning. Don't judge me. It's
come on. I'll do it for you. Oh yeah, man. I can tell.
But I do need a teeth cleaning.
Yeah, man. It's kind of funny how part of my dental school journey was documented on YouTube as well, and it was pretty endearing to get people around the world congratulating me for graduating. So thank you, man. I appreciate it. And now on to a new chapter of actually being a dentist versus just a dental student.
Amazing. And a crypto nerd. When any information you can give us on where's Trinity at?
Yep, we're actively testing it right now. So the code is deployed on testnet. We're just running through all the functions to make sure they work fine. And then when me, Executioner, and Red Squirrel are happy with it, and the dev will send it out to get audited. And once the audit comes back, we'll probably do one more round of testing after we fix everything to make sure that it's good, and then it'll go live. But I'm really excited about it, man. I mean, just all the fun games we can play with LP. We've been having conversations, me, Executioner, Red Squirrel in the background about it. It's pretty cool. I mean, we're pretty much taking, an NFT that exists right now for all three of us, and we're splitting it into going to be three things simultaneously. It's going to be an NFT, the individual token, and it'll be Trinity, the Trinity token at the same time, because you can redeem each for all of them. So it's actually like a Trinity. If you think about it, like the Holy Trinity, with God being this Father, Son, and Holy Spirit all simultaneously. It's kind of the same thing with the NFTs and the coins. Like it's like this ethereal thing that exists that can either be an NFT, the individual coin, or the Trinity token all at the same time.
Yeah, I'm excited to that tech. Like, so what you're gonna really be able to get people is the tech, like nailing that down and making it fluid and have a nice clean front end, and being able to go in interchange between them, and then find out where the value sink is in that loop is going to be pretty fun. And I'm sure there's some sort of payment, like there's some sort of ROI that you could probably get through there as well. I'm assuming.
Mm-hmm. Yeah, the Trinity token can be staked for a percentage of the fees. When you go from NFT to token, there's, I believe, a 6% fee on the tokens that you get, and those get distributed to Trinity stakers. But that also doesn't preclude us from creating future staking pools in the future. If you want to, and I'll pull the curtains up a little bit, give you guys a little thoughts on where our heads are at a bit. If say people for some reason really, really value the individual tokens for some reason, they're like, the tokens are the thing that have a lot of value, and the price starts reflecting that. Well, then what we can do at that point is direct value to the NFTs. And the most obvious way is like, hey, if you stake the NFTs, you get money, like just for a hypothetical. So now that they can rebalance like where the market prices or values the NFTs versus the tokens to start using the infrastructure of the Trinity contract that we built. But since all of them are the same, essentially, it's all one fixed supply across all three assets. And so as you move from one to the other, like you can almost create like supply shocks at different places at wherever we want to inject value, however we want to. And we have three people, me, Red, and Hexecution, are all gonna, we're obviously friends and in contact, but we're all have our own interests and things that we like to do and create value in our own unique ways. And all of that gets funneled back into Trinity somehow in some shape.
Amazing. Looking forward to it.
It's gonna be fun. Well, Axis, tell people where they can find you, man, and we'll sign out.
Yeah, guys, you guys know where I'm at. I'm on youtube.com/AxisAlive or x.com/AxisAlive. I just started posting, so if you want some juicy alpha, go on to X and go get some free stuff. If you want a little bit more, if you're listening in and you haven't learned about me or Sloth before, you can go check out our websites. We offer different services, and yeah, there's to take your game to the next level.
Yep. Go follow Axis on his YouTube channel, Twitter. He has a lot of really good content on accessalive.com, free content as well. So check that out, see what he's all about. I'll put that in the description once we sign off. And then I have my website down below, cryptosloth.info. And I'll give you guys for a welcome back present. There is a 50% discount code for your first month if you sign up. So that'll be around for maybe the next 24, 48 hours. We'll see. So if you want to join in my private group, there is an opportunity for you there. All right, Axis, thanks so much for popping on, man. I really appreciate it. It's good catching up and chatting with you.
Thanks, buddy.
All right, everybody.
See you guys.
Peace out.